they're off. Welcome to Around the Track, the most exciting 15 minutes in wealth management by Dynasty Financial Partners and hosted by CEO Cheryl Penny.
Hello, welcome to another season of Around the Track. Hello, and welcome to another edition of Around the Track, the most exciting 15 minutes in wealth management. I'm your host, founder and CEO of Dynasty Financial Partners, Cheryl Penny, and I'm incredibly excited about this episode of Around the Track because I'm joined by one of our board members at Dynasty, Vidur Khatri, who is a principal at Abry and joined our board about a year ago.
That's right.
So thank you so much for sitting down and having this conversation with us on Around the Track. You've seen some of the shows, so you know there's only one rule on Around the Track, which is we're going to try to make our way around the virtual track after I ask you 8 rapid-fire questions in and around 15 minutes. So you up for that?
Sure.
Okay. All right. So let's get you out of the gate strong. Tell the audience a little bit about yourself.
Yeah, sure. Well, first of all, you and I have a lot in common. One of those being that we're both New Englanders. Yep. You being from Maine, me being from the greater Boston area. When I orient people and tell them when I grew up, I tell them I grew up during the 2000s and 2010s, better known as the New England Patriots dynasty era. Yes. And that was the first dynasty I grew up knowing, long before I came across Dynasty Financial Partners. But before that, I grew up in a family, Indian Americans. My parents migrated to the U.S. In the 80s because of the amazing opportunity for education in this country. Grew up, had a great Catholic education at Xaverian Brothers High School and then later at Georgetown. Great academic experiences, but also phenomenal communities to learn and grow. After that, I went on to work at Credit Suisse in the leveraged finance group here in New York. Phenomenal place to start your career. And then following that, I joined Abry Partners up in Boston back in 2016. I've been there for about a decade now. A little bit about Abry Partners. We're a Boston-based private equity firm with about $5 billion in active capital. I've been around for 35 years, which is a long time in private equity terms. It's like 35 furlongs. 60 investment professionals. We have 3 offices, one in Charlotte, one in London, and of course our headquarters in Boston. We are a sector-focused private equity firm, so we focus on technology, financial services, healthcare, business services. I spend most of my time within our financial services group, and within that, the subsectors include wealth management, insurance services, GRC, among many others. We have a couple different fund strategies at Abry. We have a private credit and liquid credit debt fund. We also have what we call our structured equity fund, which typically takes minority interest or preferred equity investments into founder-backed businesses. And last but not least, we have a common equity fund where we focus on investing in businesses with enterprise value below $2 billion. I've been with the firm for about 10 years now. I spend about half my time supporting our existing portfolio investments like Dynasty, and the other half, of course, sourcing and executing new investments. Yeah. On a personal note, I'm a concert enthusiast. Also, I'm a runner, a marathon runner. I just completed my 3rd marathon in 2 years, and I'm always up for my next challenge. That's
awesome. I appreciate you. You covered a lot there. And I'd be remiss if I didn't say thank you to you and all your partners. You've been incredible partners to us at Dynasty with Abry's investment in the firm. So thank you for that. You mentioned, it's interesting, you mentioned the Dynasty of the Patriots. It's part of what inspired the naming of our company, Dynasty, because we were thinking about what means winning consistently over time, and being from New England, I clearly was thinking about the Patriots dynasty, and I've had the opportunity to share that story actually with Tom Brady.
Oh, I love that.
To tell him that he can take a little bit of credit in the naming. He's actually partnered up on a company called No Bull with another friend of our firm, Mike Rapoli. So
amazing.
So moving along around the front stretch of the track together. What sparks your interest in finance?
Yeah, a couple things. So you can always learn a lot about someone from their first job they had. The first job that I had was working at the snack shack and being a referee in the neighborhood soccer program. And I think I drove my colleagues absolutely crazy because I was the type of guy that was like, hey, we can make more money by having better inventory, or we should be open 30 minutes later. And that drove people crazy. But at a micro level, I think what that taught me is I had this curiosity and this fascination of businesses at a 12-year-old young age. I think second thing, and second spark, I'd say is I really love playing team sports. I love being a part of a team. And I'm so glad that early in my life, I learned that I was a super mediocre athlete because it taught me that, one, I needed to do something else other than sports. And two, it taught me just the value about being an energizing team player. And that really kind of would come up later in my career. And then I think the third spark is just by nature of growing up in the 2000s and 2010s, there's just so many businesses being created. Technology was just evolving at such a breakneck pace. The way that you and I were interacting on social completely changed. The way that we were interacting on smartphones completely changed the way we were all interacting, and then eventually that all became commercialized. But I think if you take those sparks together, the technology evolution, the team-oriented nature, and then of course just the micro level and fascination of businesses, and you tie that all together, really propelled me into pursuing a career in team-oriented finance.
Got it. All right, Vidur, you worked across both sides of the table in restructuring at Credit Suisse and now on the private equity side at Abry. How did those early experiences shape your investment lens today?
Yeah, so in finance parlance, we call that moving from the sell side to the buy side. And the sell side, starting your career on Wall Street at an investment bank is a really good training ground. Here in New York, it's a wonderful place to be and to start your career. So as an analyst at Credit Suisse and leverage finance origination and restructuring group, learned a lot about doing corporate financings as well as LBO financings, which ended up being a really good foundation later in my career at Abry. Learned a lot about the cap structure, managing through volatility. It was a really interesting time in the high yield market where energy prices fell significantly and corporates were really solving for a hole in their cap structure. Taught me a lot about the pressure points in the cap structure and to think about cash flow and be really disciplined with how you think about adequately capitalizing a business. Fast forward, after 2 years at Credit Suisse, I joined Abry Partners. I was drawn to Abry mostly because of the tight-knit group of partners that were homegrown up in Boston, my own backyard. Abry, of course, are focused on the equity upside, where, of course, everything we do is about risk-adjusted returns. And everything we do when it comes to underwriting is, of course, also has to do with managing downside. And I think Credit Suisse, my career there, just a good foundation for thinking through the cap structure, making sure that we're adequately prepared for market volatility, any type of market bumps that might come about, and to really kind of pressure test the downside.
One of the things that attracted us to working together with Abry is you guys are not new to the RIA space, right? You've been in the ecosystem for quite some time, making various investments. So maybe talk a little bit about that and what is attractive to you in the space and why do you guys like the space?
Yeah, you're right. We've been investing in this industry for quite some time right now. We love the space for a variety of reasons. Dynasty, of course, is one of our investments in the space of two that are currently active. We also have another investment in a business called Prime Capital Financial in Overland Park, Kansas. We love this space for a variety of reasons. It is a large TAM. Depending on how you cut it up, it's a $9 trillion TAM and growing really fast. There's a lot of wonderful structural tailwinds that are driving this industry. First and foremost, it's just this need for advice. And second, it's this transition, the shift from the old archaic structural models from traditional brokerage and wirehouses to that independence model. And that independence model creates really good, steady free cash flow in these businesses. Also, these businesses are, there's so many of them out there. There's 15,000 of them. It's a highly fragmented industry. It's ripe for consolidation. It's ripe for buy and build. Technology in this industry is a huge opportunity to continuously engage clients, but also to continue to provide really good resources to advisors and grow with them. In terms of kind of what we look for in investments in the space, I mean, we've loved backing teams that have a proven execution experience, but are really, really ingrained to thinking about a tightly integrated model. I think everything comes down to really good integration for RIAs. I think that's what separates the good ones from the great ones. We also love businesses that have really strong, repeatable organic growth. And by organic growth, of course, I mean when you take out the market, what kind of net new asset growth that you're bringing in each year. And the companies that have found a way to integrate really well and to demonstrate really good, repeatable organic growth have been the businesses that we've been able to back.
I'm going to throw in a quick bonus question just because I know that a lot of our listeners are going to want me to ask this question. Just high level, I mean, how do you feel about valuations right now in the RIA space?
Yeah, there's always a lot of talk about valuations. It's a really well intermediated space in the RIA land. When debt was virtually free for private equity backed RIAs, multiples definitely crept up, and people understood the durability of these businesses and really attracted a lot of investment because of the fragmented nature of the business, the industry, and frankly the fact that they're scarce assets. And overall, we continue to see multiples in the space maintain, which is really great to see. This is a place where it's attracting more investment, not less. I think there's a lot of sponsors that are entering the space that are excited to put money to work in the space. And what's really unique about the space too is that it's a regenerative model too. You're seeing new RIAs pop up. The mass fragmentation is continuing. It's also, I feel like we're in the middle innings still of consolidation. When you look at other industries like insurance brokerage, where private equity has been a steward in that industry for 2 decades, valuations have held in that industry. And so if that's any indicator for what valuation and multiples will do in the wealth industry, I think we're hopefully in store for continue to see robust multiples in space.
Yeah, I totally agree with you. I also think it's an essential industry. It's an industry where the number of advisors actually is declining, right? So the quality ones that are growing, leveraging technology, I don't see a lot of reason to see too much of a retraction in multiples. So thanks for that. All right, back on track.
Sure.
We're on the backstretch now. So you mentioned something earlier about how you guys really focus on investing in high quality teams. And where you sit, managing the portfolio of companies, you have a great purview into watching how a lot of your teams are interacting. In your view, what separates a really good team from a great team?
Yeah, investing and backing in teams is the most important thing we do at Abry. It's probably if not the most, the single most, if not the most important. It's up there among the top few important criteria we use to evaluate a new investment. So backing teams is what we do at Abry. We look for a few things. First and foremost, it's real strategic clarity. Does the management team really understand what the levers are to drive market-leading growth in that category? I think second is really execution discipline. Has the team not only demonstrated an understanding of not just what those levers are, but also what are the measurable KPIs to continue to pull those levers and measure that to continue to drive success? If it's a buy and build platform, if it's an acquisition strategy, has the management team demonstrated that they can identify, source, execute deals, and be able to integrate those deals and have them perform? And I think last but not least, I think cultural alignment is really important too in how we evaluate teams. Is the team low ego? Are they willing to adapt? Do they have a high culture of accountability? Those are all super important things that we look for when we evaluate teams. And I think to your question about what separates the good from the great teams, I think it's really about self-awareness. I think the best management teams are the ones that know where their excellence starts and stops and are really willing to put people around them that create the tension to really lean into the partnership, our partnership, and really allow us to bring resources to bear to allow them to really succeed.
Great. So we're here in New York. We just finished up our first quarter board meeting for Dynasty. You obviously have a front row seat, to how we're doing at Dynasty. But maybe ask you, why did Abry decide to make the investment? I obviously, and maybe I'm a little biased in saying this, I think we're a category of one in terms of, inventing the integrated model, right, for the high end of the RIA space. But where do you see the opportunity set for us, and why are you so excited to be along for the ride as a partner with us on the cap table?
Yeah, I mean, we don't look at Dynasty as just a service provider. Dynasty is an ecosystem builder. It's a unifier of independence. And I think what's so foundational about Dynasty is what really attracted us, and it's that foundation of the triangulation of advice. It's the fact that the wealthiest people in this country and the people who have had access to good advice, it's separate from safe custody, it's separate from where products are manufactured and sold, and that's so important in having advice that's separated from that. I think if you look at what Dynasty understood from the get-go, that RIAs and advisors don't just need infrastructure, they need infrastructure that will continue to evolve and grow with them. And when I look at just the breadth of capability and how this business has evolved, even since we invested, just on the investment platform side, on the planning tools, on compliance, on M&A as a capital provider, it's second to none. It's really an N of one in this space, as you really put it. And something that you say that I absolutely love and feel in that boardroom is you're building the plane as you're flying it. And just coming out of that boardroom today and hearing about all the exciting things about how we're evolving our infrastructure and our products gets me really excited, because not only are we growing as a business, we're growing with our partner firms. And I think that's a very exciting place to be.
We hear, and you mentioned earlier, we hear all the time, there's new entrants coming into the space, a lot of, let's call them competitors, other private equity firms or pools of capital that are coming in. When done well, what role do you see private equity playing, and why is it so important to have high quality private equity firms like Abry in the RIA space?
Yeah, I think private equity has a tremendous opportunity, but also responsibility in this industry. And I say responsibility because what's made this industry so attractive for such a long period of time is the fact that these are founder-owned businesses, typically built on a foundation of trust, immensely personal businesses. And I think private equity, it's incumbent on them to be a steward of the industry to make sure that that's not sacrificed, or it's never sacrificed. But as you know, technology is changing really fast, the landscape's shifting, customers are demanding more, compliance is becoming more complex, it's becoming more expensive. And I think for RIAs, many will struggle to either adapt, they might not have the resources to be able to keep up with that landscape shift. And I think that's where private equity comes in. I think that private equity can be not only just bring the capital, but the resources, the operational support, the sector expertise to really help institutionalize the RIA, continue to invest in the RIA, continue to improve the customer experience, and then also put capital behind the RIA to execute on a variety of initiatives, investing in the business, continue to execute on a sound capital allocation philosophy around recruitment, around M&A, and I think that's a real opportunity for private equity.
Awesome. All right, we've come to our last question. We're here at the finish line, and you will not be surprised at the question because you've seen the show, and that is to ask you, what is your triple crown? And of course, what I mean by that is, what is that big, seemingly unattainable goal that still sits out there for you? Obviously, you're a young guy, so there's hopefully a lot of opportunity for you to accomplish everything within your own triple crown, but what is it?
Yeah, sure. So I think, first and foremost, I think I get so energized and excited to support our portfolio companies every single day. I think at Abry, we have a lot of them, and every single day we're committed to driving an outstanding outcome for our portfolio companies, the shareholders, the management teams, and of course our LPs. Second, I get immense pride out of growing Abry Partners and being a part of our team. One of the most rewarding things in my career has been I've been able to receive amazing mentors at my firm. And one of the most rewarding things, now in my career is to be that mentor as well and continue to cultivate that growth. And the most rewarding thing that I have in my position is I get to see the junior teams that come on, learn, grow, help kind of train them, and then watch them become big contributors at the firm. I think that's really exciting for me. And then, last but not least, I think I mentioned to you I'm a marathon runner. I think that's important to me. Boston has an amazing culture of runners. Yeah. And it's crazy. You go out for a marathon training for about 16 weeks or something. It's usually a long block of training, and you put your body through absolute hell. You suppress your immune system to the point where you're getting sick all the time. You get out there and run when it's not fun to run, especially in the Boston area. And you do that all for this one chance to get out there on race day and to go ahead and prove yourself. And you get out there sometimes on race day, and you think you're prepared, and then all of a sudden you get to mile 18 and you really start to learn a lot about yourself. The weather could be against you. You could get your leg clipped. You could have the worst cramps in your life. And you really find out about your grit and mindset really late in the stretch and that final third when you're headed home. And I think there is a parallel in there to control investing. I genuinely do.
Sounds like being an entrepreneur too.
That's right. Yeah. And I think that what's really interesting about that parallel is that you can be prepared, you can be disciplined, but what's most important is how you adapt and show your mindset down the stretch. And I think that's what shows a lot of virtue in any type of partnership, in any type of training, whether it's physical, whether it's professional. And I think that's what really can prove itself out when you're coming down the stretch and really running home.
All right, well, awesome. Next time we do this, we're going to have to do it a longer distance because it sounds like a mile is too short for you. But I really appreciate you having the conversation.
Thanks
I appreciate the partnership very much. And thank you to all of you as well for tuning in to another edition of Around the Track.